We're going to move straight on right now to our next speaker, Mr. Naeem Aslam from Ava Trade, discussing Bitcoin. Is it a good time to invest in gold and Bitcoin? Well, Bitcoin has outperformed gold by a million miles, but investors are still somewhat reluctant to get involved in this space. The reality is that smart money has started to back one particular asset, and retail traders and investors must need to pay attention to this. So we're going to talk more about this. Mr. Naeem Aslam, he's got over 15 years of trading experience. He's also worked as a columnist for Forbes US for over 5 years. So please join me in welcoming to the stage Mr. Naeem Aslam.
Thank you for being here, and it's an absolutely pleasing, plumb pleasure to be in person with you. Just very briefly about my experience and where the market is at today and why there's a great opportunity. When the initial financial crisis happened, I literally left the university at the time in 2007, and financial crises were right on doorstep, and went to trade with several different companies. At the peak of financial crisis, I was working as a hedge fund trader for Bank of York Mellon. And then from there shifted to equity trading with Bank of America. So we really did see one particular thing, and that was the ups and the downs of gold prices from trading perspective, from the trading desk, from institutions. And I think today's presentation, in the light of what happened back in 2008, 2013 to 2020, is about to happen pretty much the same. Obviously, I'm not going to stand here and then say that, yes, exactly that will happen, because that would be completely wrong. But I think odds are certainly indicating that that is the direction that we are heading towards. Just a small disclosure, anything that we're going to say can't be perceived as an advice. Do your own due diligence, as always. Information is everything is just purely for information and education purposes. So the agenda for today really is, should we be buying or selling gold? Macro models, correlations that matter, big levels to watch. And then from there onwards, we'll be moving to Bitcoin. When I say Bitcoin, I actually hold Bitcoin in my wallet since 2016, and I've never sold them. I kept them, and I'm planning to keep them. Why is that? Of course, we'll be discussing in a lot more detail. How many of you know this individual person? Who is he? Can anyone say the name or familiar this face? If you are not, I highly recommend you to become familiar with this particular individual. He's the one who's going to be very much determining your investment decision. His policies will dictate your investment decisions going forward. He's the chairman of the Federal Reserve Bank in America. And all the interest rate decisions, asset purchase programs, they are controlled by this particular individuals. Whenever the announcement happens, you will see massive movements in the market. And of course, in the following slides, we do have a correlation and all of that. I will explain that to you in a lot more detail. But just a little bit of a background, because earlier there was a lot of conversation about robo-trading, which to an extent is absolutely true, and I concur with him. The few elements that I respectfully question based on my 15 years of experience in the industry is there's a human element which is very, very important. So here it is. When financial crisis happened back in 2008, the central bank, the Federal Reserve over in America, they had to support the economy at the time. So what they did, there are two ways to support the economies. Number one is lower the interest rate. When they lower the interest rate, that cost for you to borrow money on the market becomes a lot more cheaper. You can go into the market and you can do it. Then they do a lot of asset purchase program. That helps banks to give you money. On the back of that, what really happens is the dollar index begins to fall. Whenever the Federal Reserve initiates its quantitative easing, the dollar index begins to fall. It happened during the financial crisis. It happened during the COVID crisis as well, last year, 2020. And when the Federal Reserve believes that now economic conditions are a lot more stronger and better, what they start to do is start increasing the interest rates from there onwards. And of course, the asset purchase program, they start to slow it down. What happens then is your dollar index begins to move higher, meaning the dollar gains more strength. And when dollar gains strength, gold prices, they begins to fall. And we are very much at that beginning. I have a very funny story to share with you. So I'm based in London, and I live in Southwest. One of my neighbors that I met a few weeks back, he's from Kuwait. And he came to me a few days back, and then he goes, how are you, blah, 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 all is well. Just to cut the story a bit short because of a time, he bought 5 kilogram of gold 2 weeks back. And he knew about my background and what I do. After buying that gold 5 kg, 2 weeks after, he came to me, and then he goes, do you think it's a good idea to buy gold? I said, don't you think it's a bit too late, given that you have already bought 5 kg of gold 2 weeks ago? At the time, or 2 or 3 weeks ago, at the time the price per kg was about 46,000 US dollars. And now the price is about 41,000-ish per kg. Now, why I believe that isn't really a good investment right now, especially in gold? Because it took nearly 10 years for gold to recover its prices. In 2013, when the Federal Reserve began the process of tightening the monetary policy, gold started to slide. It went all the way to $980 approximately. And during the COVID crisis, when the Federal Reserve began the process of increasing their asset purchase program and lower the interest rate, only at that time, gold came back to its previous highs that we saw back in 2010 or 11, in around that time. So it came back to 90. So overall, it took 10 years for gold prices to recover. So this is what we're really talking about in terms of a correlation between gold and dollar index. This is your dollar index. This is your gold, something that I was referring to you guys. When this goes down, this goes up. This goes up, this goes down. And I am more interested in this area right now. This particular area over here is the opportunity that we have right now. The playbook clearly shows the correlation, how the dollar moves in tandem with gold prices. Now, the fact that the federal conditions are a lot more better. Look at the US GDP growth. Look at the US employment data. Look at the retail sales number. Situations are improving day by day. So what we have begun to hear from the Federal Reserve is that, okay, now it's time to start asset purchase program, meaning sorry, I have to go back. Meaning the dollar index over here has started to move higher. And gold prices over here, they're moving to the downside. Now, of course, in the next slide, we will talk about the levels where it can fall. Now, I can't guarantee you with 100% certainty that gold prices will continue to fall for one particular reason. Because if the mess which is going on right now in China with Evergrande's, the big property company, in huge trouble, if anything becomes worse on that side, this particular price, which is moving to the downside, it could actually shoot up. That is the only wild card for me when it comes to gold prices. Otherwise, I think that given the history that we have seen, given how the macro models of macroeconomics would work, gold prices should continue to move to the downside. Now, what are the important levels to watch in terms of that? Of course, these are the technical levels in front of you guys, if you wanted to look at them and wanted to pay attention to. But I think in the immediate future, from psychological point of view, gold prices were in around 1980 at the peak. They went to where? They went to about 970. That's where they went. So it was nearly about $1,000 move over there, approximately. Now, I don't expect gold prices to go down by $1,000, but I believe there won't be no surprise if we do see gold prices falling all the way to perhaps 13 or 1,200. And that could be just actually a pretty good case for, if it stays about 1,500 to 1,300, then we really have a good chance of gold prices to continue to move higher because of inflation and everything else. We could go towards that $3,000 price mark. Otherwise, I think in the immediate future, the level that we are looking at, or the levels that most of the economists are really looking at, is 1,500. Now, something that I have it in a wallet, something that when I came across and I really became a huge fan of this, is obviously digital gold. Few things matter when it comes to it, and I'm going to keep it very, very easy for you guys to really understand it. So I'm not going to make it any complicated than what it is. From day one, it is only about three things. Regulations, i.e. how the central banks, the governments will react to that. From day one, that has been the case. And even today, that is the case. Which government is accepting, which government isn't accepting. Two is adoption, which back in 2017, there was a lot of talk that institutional investors will get involved, but they didn't, they couldn't. But now, there is a clear evidence of that adoption happening. We will talk about it in a bit. And the last part is technology. One of the biggest upgrades in the history of Bitcoin is about to happen next month in November. Sorry, in 2 months' time. And that's called Taproot, which is going to address a lot of issues in terms of scaling and the speed. That is something that we really have to watch out for. And I think that has a huge potential for in terms of pushing the Bitcoin price at that 100,000 price level, really. Now, of course, in the news, whenever you read Forbes, whenever you read CNBC or Bloomberg, it's you know, we actually, like, as a part of my job, all of these guys, they will come to us. They will ask us, what do you guys think? Whether it's a Wall Street Journal, whether it's CNBC. You could Google it anytime. So they will come to us and they will ask us, what do you think about China? This is a big news that China has come out that now they're going to ban anything. And then we try to tame them. We try to control the narrative to a certain extent, whatever we can, that this is not in news anymore. 33 times China has tried and then sent those headlines. I think the most recent article I did was in Wall Street Journal 3 days ago. You could read that. I said 33 times it happened. Do not make investors panic about that China is controlling something, or if China bans it, Bitcoin is going to go away. No, certainly not. You know why? Because the biggest country in the world in terms of financial markets, the US regulator. So I have a very intriguing story to tell, and I will keep it very short. The chairman of the SEC, Security Exchange Commission, Gary Gensler, he used to teach a course on blockchain covering Bitcoin and other derivatives at MIT. And he has a very positive stance towards it, and I myself have attended that course. He's very much, I wouldn't say crypto-friendly, but he understands the potential of it. And so far, we haven't heard anything adverse. And the most important thing in relation to that is he hasn't brought any regulations so far which is going to say that, okay, you know what, the US is about to ban everything. All the mining companies which were in China, actually they have moved out to a larger extent, because for the last 6 months, if anyone has done really well, it's the people who've been shipping the mining machines out of China to America, because that has there's a huge operations of that. Now, something that I wanted to, no, not on this one. I think there was, no, okay, we'll go back. Now, the story that I kind of wanted to say was, BlackRock is the biggest institution in the world. BlackRock was the institution which helped the US government in 2008 to sell their treasuries, like meaning help them to come out of their recession. BlackRock was the institution which helped the US government during the COVID crisis to become the prime brokerage of selling those treasuries. Now, very recently, which is something that you don't really read much in media, and we really try to push it, BlackRock made a massive investment in Bitcoin mining firms. So imagine an institution which really advises the White House to how to come out of everything when you have a financial crisis on your doorstep, and that particular institution which has the most power in the White House invest in Bitcoin. That sends the clear and a loud message where Bitcoin is really going. That's why about China controlling the narrative, I don't think that they can. I believe Bitcoin is very much going to continue to move higher, even during this particular sell-off that happened on the back of Chinese news. If you look at the disclosures from Morgan Stanley, they actually bought massive amount of MicroStrategy's shares on the back of that. The only people who make somehow, if they are going to get scared, it will be the retail investors. Institutions find these sell-off as an opportunity rather than being scared of what is happening in the market. Because they know, I mean, no one can say for sure that, yes, Bitcoin will be the future, but one thing is pretty certain, looking at where the situation is, that it will continue to exist parallel to other fiat currencies, whether that is a CBDC or any form of other currency. Bitcoin will continue to exist going forward. So the big question is, would you be buying if Bitcoin falls below 30,000? Again, the technical levels are right in front of you guys if you wanted to take a note. But I think the most important numbers are your psychological numbers. And I can say it on the record, I suppose it is going on YouTube. I will continue to buy Bitcoin even if it falls to 3,000, because that would be a bargain price to buy it. Why wouldn't you? And two events, as I mentioned earlier, to watch out for is, of course, November, the Taproot upgrade on the technology side. And secondly, it is highly, highly likely now that the SEC will approve the ETF. Not that it matters that much now, because we do have our institutions who can buy shares, just like how I gave you example of Morgan Stanley and many other companies, because those funds, they exist, you can buy the shares of those ones. But having an ETF would only increase the liquidity into the system. I'm going to leave you guys with one last thought. I'm not standing here to tell you what to do, what not to do. I'm not standing here to tell you where the Bitcoin price is going to be going. But one question that I wanted to leave you with is, when it comes to Bitcoins or cryptocurrencies, I hate to say that, yeah, okay, I'm going to look in my ball and I'm going to tell you in the prison ball where the price is going to be going. No, I'm going to actually look at the fundamentals which are driving them. Here are a few of them. Number one, are those banks, institutions, such as Goldman Sachs, Morgan Stanley, and the name continues, are they increasing their headcounts? Meaning, are they employing more people? And more recently, I had a panel with Fidelity and Nomura and a few other guys. Even if you look on LinkedIn, you will see that the most amount of jobs are coming is in the digital sector, in the digital currency sector. That's the first evidence that, yes, these guys are hungry to capture the market. These guys are hungry to get more or to bank on the price appreciation, given the current sell-off that we have seen. The second element that we have to pay attention to, Bitcoin has been associated with a very bad names such as money laundering and all of that, which to a certain extent is being used, and there's no denial in that. The reputation damage was there. It took us a very long time to come back. The bottom line is, institutions have started to come in. Now, I'm sure all of you guys are trading Forex, so you understand leverage, what leverage is. There is going to be excess leverage into the market. And this excess leverage is not from retail clients anymore. This is excessive leverage that institutions would be trading. Any blowout on that front is going to do a massive damage to Bitcoin's reputation, where people are already aching to find an excuse to damage the reputation. And if it happens, it will take quite a lot of time for Bitcoin to recover from there onwards. But overall, I think environment remains the same. Again, it has been a pleasing, plum pleasure to be here with you guys, and thank you for your time.